year 2026 at 9.6 plus or minus 1%. We opened the year with a very strong decline in inflation to 3.8% in January. We expect that when the February inflation is printed sometime next week, we will see another decline in inflation. Now, this is largely on the back of the supporting downward factors that we have seen announced in the 2026 budget and the currency, which remains in a year-on-year appreciation territory, with oil prices also contained so far. But our view is that it won't stay below 6%. 6% is the central bank's minimum target. Our view is that by the time we hit second half of this year, inflation will lift above the 6%. However, we do not see it climbing into double digits because the forces that will retain it in single digit are much, much stronger with the VAT reforms that was announced in the 2026 budget that has reduced cost escalation for businesses and consumers. Also, with exchange rates remaining fairly stable over the course of the year, we expect that all of this will work together and keep inflation in single digits. Our view on inflation by the end of the year looks more positive than when we first had this conversation or when we last had this conversation in December. We lower our expectation for year-end inflation to 7.5% plus or minus 1%. And this is supported by, as well as exchange rate and supply side factors and appropriately tight monetary policy stance. Now, with inflation in single digits, what we are saying is interest rates on the fixed income market have moved sharply downwards since the start of the year, so that the 91-day T-bills now hovers around 6.5% as the markets and the treasury prices in the lower inflation. We expect that this downward pressure would continue in the next auction. Also, one factor that has driven interest rate down beyond the low inflation is the strong volume of money supply on the market. Now, there's so much money supply on the market that investors are searching for where to park these funds. So beyond T-bills, we also see strong demand for bonds. As a result of this strong demand for bonds, the price of bonds have increased. Now, there's a negative relationship or inverse relationship between the price of bond and the interest rates on bonds. So as bond prices went up sharply, the interest rates on bonds have declined. From an average of 15% at the end of 2025, we now average about 11.7% across the bond maturity curve, which also means that investors who are playing in the safer, relatively safer investment markets of fixed income do not seem to be happy with the yields, the lower yields they get. So what do we see? The strong money supply on the market is also driving a lot of funds towards the equities market, which is a more riskier position to take in search of higher returns. And that explains why we have so much rally or increase on the stock market right now. As a bit of conclusion, I would like to emphasize that whilst we have strong demand for equities, as a result of the strong money supply looking for where to park, it is also important to take note of the fact that we now have so much money chasing few stocks. So the demand for stock continues to outstrip the supply of stock, hence the rally or the upsurge you see in stock prices. However, it's also important to take note of the exit possibilities, the liquidity of the stock. How easy will it be to exit and how easy will it be to enter? Those liquidity considerations are also important so that by the time you place an order for stock, because there are fewer stocks on supply, it may take some time to execute the transaction. And this may also weigh on the overall return that you get. So in conclusion, I would like to say that macro stability has been restored. We now have this stability being priced in the markets. Rates are lower as a result of this low inflation risk. And there's so much liquidity on the market, which investors are packing into riskier assets like stocks in search of higher returns. But there needs to be strong consideration for liquidity of these stocks when you want to exit or enter. Thank you very much, Mbuke. I'll pause at this junction. I'm happy to take questions.
Thank you so much, Courage. That was very nice and insightful. Okay, so I have a question for you. What are the biggest upside risks to your inflation forecast? That's my first question.
Right. I would say there are three important upside risks we need to factor in our outlook. Number one, I mentioned the heavy money supply on the market. Now, if the authority, and this means that authorities would have to be very strategic in how they manage the strong money supply on the market with yields coming down so low. As the yields decline, investors may start to see lower opportunity cost of consumption, and they may want to deploy some of this excess money supply into consumption, and the cost price of goods and services to go up. So heavy money supply that we are seeing on the market is one key risk. The other risk is the volatile energy prices or crude oil prices we are seeing on the world markets. And they are driven by geopolitical tensions, particularly between US and Iran. If these prices continue to rally towards $80 per barrel and holds there until second half of this year, it could also create a pass-through to prices in the domestic market. Finally, in recent days, it's beginning to become clear that the supply for food items could be very fragile. And so a little shock on the supply side could also cause price of food items to move up faster than we have seen in the recent months. So these are the key risks that we see to the inflation outlook.
Okay, okay. And we have a question in the chat that says, what should we expect from the stock market next month as major stocks are shooting up? And should we expect correction anytime soon?
So I would say that if you, because the question mentioned what we should expect in the next month, I would rather want to say that when you take a position in the stock market, your outlook should be longer than next month, longer than 12 months, should be medium term. Because in a month, in a 12-month cycle, you could have sharp falls, sharp rises. And if you play the market in that manner, you could get your funds bent. So my view would be look for fundamentally strong stocks, look for stocks that could give you dividends or have growth potentials, and stay in it for the long haul with that outlook so that short-term fluctuations in the price should not be much of a concern.
Okay, thank you so much, Courage. Okay, so I'm gonna move slightly to our next person, and this is our portfolio manager, Herbert. But before we hop in, if you have any issues, please, there is a link that has been put into the chat. So you can go in. If there's any issues that you have with the app, if there are any complaints that you have, there is a link that should be in the chat right now. So you can click on it and then we will be able to address that directly. But again, if you have any questions in relation to what any of the speakers have said, there is a Q&A function. You can go ahead and put your questions there and we will be able to answer it. So before Herbert hops on, he will be talking about the fund performance review. So how the market shaped performance in 2025. We'll be doing a strategic outlook on 2026 and managing reinvestment risk in a low interest rates environment. So over to you, Herbert.
Hi, thanks, Nabuka. A second to share my screen. Leave my screen is visible. So good morning once again to everyone. And Kari just given a bit of context and background on where we currently are with regards to the macros and the fiscals. And I think the story is very straightforward from the interest rate point of view, where we've seen interest rates decline sharply. So when you look at the chart on your right, we are comparing the 91-day, which is the benchmark for the fund, to what ICLF's current year-to-date return is. And the reason that you're seeing the outperformance of the fund against the benchmark is due to the fact that we've been very disciplined in our risk management. We've been very active in terms of our treasury management on the portfolio as well. So we've navigated this rate transition effectively, and we're currently outperforming the benchmark, but we're still trying to balance the yield and then the liquidity mandate of the fund. So as of today, the fund year-to-date performance is 11.5% compared to the last 91-day bill rate of 6.5%. Now, moving on to AUM growth. And again, when you compare the AUM from last year, July 25 to today, we've seen about a 94% growth in AUM. And this is just communicating sustained investor confidence in the fund, despite the fact that interest rates continue to decline. And so, we consistently get questions about the decline in interest rate and why investors should stay in IC liquidity fund. And the simple answer is we've decided to take a very active management approach on our treasury portfolio, and we are still maintaining a very disciplined approach in balancing yield and liquidity of the fund. The next slide is looking at our outlook and strategy. So in terms of outlook, we expect interest rates to still remain in these low digits range. So the 91-day currently is at 6.5. Looking at the excess liquidity coverage mentioned as well, it's likely it could go down further. So we don't expect rates to go up higher anytime soon. And also because we have inflation in single digits around 3.8%. And when we look at the positioning of the authorities, they seem likely to keep rates this low because it lowers sovereign risk and also reduces refinancing risk when they have to pay back maturing debt like treasury bills, euro bonds, and local GOG bonds as well. And what we are doing with regards to managing reinvestment risk on the portfolio, we've already taken some active positions across the curve. We have a bit of bond exposure that has a maturity of less than 1 year to capture a bit of yield. And we've staggered our investment across the curve to ensure that we are well positioned in this current low interest rate environment. The last slide is just looking at our asset class exposure. And again, this is reflective of the current environment where previously we used to position mainly in bank securities. That was fixed deposits and repos, and they were offering much higher yields at the time. But we've scaled down that allocation. So compared to last quarter, we had fixed deposits and repos at around 72%, i.e. of the entire portfolio. And today it stands at 37%. And you can see the increase in the Government of Ghana Treasury bills from 9.4 to 45%, and a slight increase in the bond exposure as well from 5.8 to 11. And again, the bond exposure is a maturity that is maturing in less than a year. So these are not long-tenured papers that pose any duration or interest rate risk to the portfolio. So the landscape has improved. We have inflation in low digits. We have the 91-day currently at 6, which is quite surprising. Policy rate is down from the highs of 28 to 30%. We have a stable currency as well. So these developments have influenced how we've rebalanced and repositioned our allocations across the asset classes. I will take any questions from here, and this brings me to the end of my presentation. Thank you.
Thank you so much, Herbert. Okay, so I have a difficult one for you. And it is returns have dropped from last year. Why should I stay in ICLF, please?
Yeah, that's a good question. I think the simple answer is we have a very professional team that is managing the fund. So when you compare the current year-to-date return to where you have even savings and core deposit rates, it's much higher than what you'd get on the core rates. It's much higher than what you get on the savings rates, and it's even currently much higher than the 91-day treasury bill rates. So the team is actively keeping in touch with the macros, and we are leveraging our insights team as well to make sure that we always take active positions on the portfolio. And we are also ensuring that at the end of the day, we still balance, again, the mandate of liquidity so that at every point in time, we don't sacrifice liquidity for yield, especially in the low interest rate environment. Thank you.
Amazing. Thank you, thank you, thank you. And I have a question, and it goes, how much of the CD's appreciation is driven by the generally weakening USD? What's the balance of internal factors versus external factors to currency stability?
Yes, I will take that. I think there's a mix of external factors enabling the city's improved performance relative to the dollar's weakening. For instance, in 2025, the dollar weakened by about 9% against major currencies. In that same period, the city gained over 40%. So you cannot attribute even most of the 40% to the dollar weakness. There must be some domestic measures that were taken to support the currency performance. And you can pin that down to the tightening fiscal situation, which reduces the demand pressures on the market, the central bank's mopping up of excess money supply on the market at the time, which also reduced the amount of CD chasing dollars. You also can pin that down to the strong gold price we've had since the recent years, which strengthened last year, creating flow of FX to build reserves and also support demand for FX on the market so that the gap between demand for FX and the supply of FX reduced, supporting the city's performance. So all these policy reforms and supply of FX combined with the 9% weakening of the dollar led to the currency performance that we saw last year and into this year.
Okay, thank you so much. Thank you so much. And I see a lot of questions in the chat that I am confident the next person who is about to hop on the call would love to answer. So I want to hand this over to the head of global markets, Alan. And Alan will talk about the Ghana Stock Exchange insights. He'll share expert views on the GSC performance and the direction for 2026. He's also going to highlight on key stocks, ETFs, customers needs to pay attention to in 2026. So over to you.
Thank you so much, Nubuka, for having me. I think Courage has touched on the overview of the market, so I'll keep it brief and focus on the Ghana Stock Exchange. We've had quite a remarkable open for the market. Last year, the market closed at 79%. This year, we're already at a 36% rally. The engine for that rally has mainly been the financial basket. I think I mentioned in my last presentation that we are very much pleased with how interest is trickling from the telecoms into the other baskets. We're seeing already price rallies on the financial baskets in the oil and also in the consumer space. Stocks like FML, GGBL, GOIL, and the likes have seen aggressive bidding in the market. We are still, I think for now, last year we were ranked amongst the top exchanges in the world. I don't think the GSE is slowing down anytime soon. We might be going into a dividend regime, and that should be a catalyst for a rally in the market. We've also fairly seen better liquidity in the market. Last year, we've already up 500% up compared to last year. A very good investor mix. We've seen both local and foreign, institutional and retail clients in the market. So I will say we're fairly on a great path. And also just to go back a little bit on the question about what the stock exchange is going to do. I very much align with my colleague Courage's stance on that. I think we should look at have a more broader based perspective on the market. I think the core of that question is, should I buy more? That is one of the main questions everyone keeps asking. Have I missed the rally? Is it too late to buy now? I think when we start thinking and anchoring performance or when to get into the stock exchange and we're very much anchored on price, it looks as if it might look like it's too late. Every time the market goes into a recovery, it looks stretched and heated. But I personally think the markets are cyclical. Come December, should these stocks be trading at a higher price, it would mean that today they were trading at a cheaper level. So I will advise investors to look at their allocations in a more long-term based. If you have, I think what I'll do is move into questions. I believe there are a lot of questions, and so I will pause for you to send some of those over. Thank you.
Yes, we have many questions for you. Okay. So I guess my first one is, with all the market movements, are you saying that there is still value to be realized on the stock market? For people who think it's too late to invest in names like New Gold or MTN, can we confidently say it's not too late to join in?
No, it's not too late to join in. I can confidently say that last year, the main rallies were on the back of the macro recovery. I think what we're going into this year, my colleague Herbert has mentioned that, Courage has as well, is we're going to a more price sensitive region. And what that means is basically investors are going to be looking to allocate just on the strength of earnings. Now, the question is, prices rallied so much. The next thing is, will price catch up to earnings? And that should be the one thing that investors should be looking at. There is still room for growth. MTN has been delivering consistently. What we will see is, once we see any dividend visibility, even across markets, across the banking and across the banking, consumer, and the telecoms, we should definitely see some room in there. So yes, and we still have quite a favorable projections on CD stability, inflation, and whatnot. So yes, I truly believe there is still value. You mentioned New Gold. There is still value in New Gold. The CD has been stable. I think the initial interest was trying to hold value on the CD. As we're still in global uncertainties, I think we don't need to disregard the fact that there might be some tailwinds in the future. We also don't see demand in gold dying down anytime soon. I personally don't see central banks liquidating their gold and going back into US Treasuries at this point. And so I think it's still a play in the portfolio. It's a hedge. We might have moved away from the growth spurt, but in terms of value and the hedge, the New Gold ETF is fairly still has value. And you also need to understand that there's a two cover with the ETF. The underlying asset is priced in dollars. And what that means is, even if you don't have growth and there is flight to safety, there's still room for growth there. If gold dips a bit and there's room and there's pressure on the CD, on the dollar, your value also is stored in there. So that's something that a lot of investors need to pay attention to.
Okay, so would you say that the strong drive towards stocks is the reason certain stocks, which have been dormant for a while, suddenly see appreciation?
You can fairly say that. I think the macro recovery is giving investors a refreshed outlook on the market, and investors are betting that some stocks should perform better. Case in point, PBC. The government is looking to locally issue cocoa bonds. That should translate into something for the likes of PBC. And also, we might see some price rallying in these stocks, and the price may be rallying due to liquidity. Sometimes when you don't have access to stock, what the buyers do is they aggressively bid in these numbers, in these names. And what they're essentially doing is to entice sellers to sell. And most people will ask, why is it so hard to find certain stocks? The main reason might be the liquidity mix. So if everybody is buying to hold and nobody wants to sell, it creates that sort of shortage in the market, and it basically leaves room for buyers to aggressively bid. So you might see the stock rallying. It might not be anything material, but just basically shortage in the investor mix. And that is why we're particularly happy about interest spreading across the baskets. Should we have a generally good mix of investors with different investment strategies, I think the GSE will see better liquidity, and we will have access across investors.
Okay. So my last question for you before we hop on to our next speaker, and
Sure.
I'll be back. And so again, if you have any questions, please do not forget to put them in the Q&A portion of this chat. But it is, how do you see the overall market valuation ratios compared to its 5-year historical value? And is the narrative that it is recovering from the debt issue still valid based on its current valuation?
Yes, it is still recovering. I believe I mentioned that the question now is how is markets, how our company performance is going to catch up to price earnings, to prices in the market. How investors are pricing it is also an indication of where they think these companies will perform. And so I do think there will be some catch up, but as the companies continue to post resilient numbers, it should give in some room for maybe more rally. We should see a fairly tapered correction in the market. But I do think that we've left the hyper growth era, and we should have a conservative growth in the market. I hope that makes sense.
Okay. Yeah, it does. Thank you
Yes.
so much,
You're
Alan.
welcome.
And we will be back to you. We have millions and millions of
Sure.
questions
Thank
to
you so much.
But again, another thing I'd mentioned earlier on is that, again, if you have any problems, please put them in the chat box with the app. But I'm gonna now pivot to my colleague Abena, who is going to be able to answer some more app specific questions. So again, chat box, there's also a link for your personal problems. Please do not put or share any of your data here for everybody to see. But we do have a link that is circulated in both the chat on Zoom and on YouTube. So if you have any problems, please feel free to click on the link and put your information in. So over to you, Abena, who will tell us a little bit about the app.
Hi, thank you, Nabuke. If you could kindly help share your screen. Thank you to our participants also for joining us for today's investor call. I'll be answering some questions on the app and also addressing the main concern we have, which is the CSD account. But before I do that, I'd like to encourage you all to please ensure the app is up to date and kindly check the App Store or Play Store for an update and click on it to update it up to the latest version so that you can enjoy all the new features that we have on the mobile app. Okay. So before I go on to answer specific questions that we received on the call, I'll first talk about the CSD account. All right. Now, as at 12 January, IC put a pause on PSCH accounts. And this was mainly due to the recent cost changes we received when we attempted to create CSD accounts. We needed further clarification on how the cost structure was going to be. So for anyone who completed registration after 12 January, there was this pop-up asking you to register your interest so that once you resume, we would continue to create your CSD account. So for all those asking, why has my CSD account delayed? It's been more than a month, especially for those who requested after the 12th of January. This is the reason why. And so we put all those who registered their interest on the wait list. So if you could go to the next slide, you notice that when you go on to Trade Live, it will tell you that your account is on the wait list. And so we will just set you up once the service resumes. Now we have good news. We have resumed creating CSD accounts. For accounts that we received between January to February, we started working on about 75% of those who registered their interest. Some were not successful. I will address that and also address what can cause a delay in your CSD accounts. But for those that were successful, you should have your CSD accounts now. We are working tirelessly over the next few weeks to ensure that you receive your CSD accounts, or at least you get an update regarding your CSD accounts requests. Okay. Now, what can cause your CSD accounts delay? Look at the next slide. This happens when the information you provide to us during registration is either incomplete, incorrect, or the documents that we receive it's not up to standard. Okay. Now, what happens is once after you complete registration, we have our team who would review your account. We'll send you an update. We typically send you an email. We'll also send you an in-app update asking you to provide us with information. Additionally, when you log into your account, you will see the prompt on your screen asking you to update your information. Please check if you see this update. If you have this on your app, it means we cannot proceed with your CSD account because we need further information from you. So please kindly update your app and check if you have this notification. In the coming weeks, for those that we need further information, you should also see this notification on your app. We'll need you to kindly update your information so that we can proceed to create accounts for you to prevent further delay. Now, once you receive your completed documents or information, another information or document which is very important is the passport size picture, the image of your passport size picture, and then the image of your Ghana card. Okay. Now, for passport size pictures, when we are creating CSC accounts, the CSC system passes to the NIA verification. And so we use the passport picture you provide us and the image of your Ghana card. If your passport picture you provide is edited, it's an AI, you have sunglasses on, wearing shades, headphones. For the men, if you are shirtless. For the women, if you have heavy makeup on, or pictures that do not fully show your face, or doesn't look like an official passport size picture, it is likely your CSD account request is going to fail. And so once that happens, when you log into the app, you see this notification asking you to provide us with a new picture. Please take a live picture of yourself. We even prefer selfies. So you can take a picture of yourself behind the plain background as a selfie, and you make sure that the lighting is also good enough so that we can use that picture to pass to the CSD system and then go ahead to create a CSD account. We see instances where when we send out this notification, we have clients also uploading the same picture they uploaded previously. Kindly refrain from doing that. Please take a new picture just so that we avoid having to come back to this issue or causing more delays to your CSD account. Okay, so I hope I've addressed all your issues on CSD. If your account has taken more than or has prolonged for over months, please check that there is no updates or requests on your account so that we can proceed to create something. Now I'll move on to answer some of the questions that came in on the app. So one of the questions we have is, how long does it take for completed transactions to show on your dashboard? Now, once you complete a transaction or once we're able to execute an order for you, there's a settlement period. Settlement is the time between when we receive funds from the seller and then when your shares are credited to you. That is 3 working days. So for instance, today is Friday. We execute the order today for you for today. It will show on your account after 3 working days. That will be on Wednesday. So it's T+4. We've also made the information available on the mobile app. So once you go onto the stock that you requested for, you click on view trades and then you see the settlement date. So it will give you a fair idea of when the stock will reflect after the trade has completed. Another question is, how many days do we wait before to approve CSD account for someone? So typically, now that you've resumed creating CSD accounts, if your information is complete, is correct, your documents are up to standard, typically it shouldn't take more than 3 weeks. We should have your accounts ready for you. So that would be the answer to your accounts. Where do dividends paid go to? Is it my share like for bank accounts? So we create for IC, we believe that it's important for you to own your own CSD account. And so when you're requesting, you notice that we ask you for your bank details now, or your mobile money, whichever one you prefer. When dividends are paid, it is paid into that settlement account you provided during registration and not straight life. So you receive the dividends in your bank account or your mobile money. Now, certain registrars do not pay dividends via mobile money. And so typically we recommend using your bank account when you are completing registration. so that if you invest in those companies, you receive your dividends accordingly. So that is where dividend payments goes. I think I've addressed all the questions that came in while, and so I'll hand it over to you, Buke.
Hi, Abina. Thank you so much for answering some of our questions. We will now be transitioning into our general Q&A session. So if you have been putting your questions in the chat box, we have been paying attention to them, and we will be answering some of your questions right now. But I kind of want to start with Alan again. Sorry, I'm picking on you this call, but the questions for you are a lot. And I wanted to find out about liquidity on the Ghana Stock Exchange. And I have two questions to help really drive at that. My first one is, why is it so hard to get shares on Clydestone? Is it purely because of the market caps? And then my second question is, why is the MTN share price not increasing as fast as other companies?
Sure. Thank you for the question. I think I'll start with the Clydestone. I think I believe I mentioned that largely it's because of investor mix. If you have a healthy investor mix, liquidity is better. We have quite a stiff investor mix across the counters. And that means that if you have one type of investor who's buying to hold for a long term, that means that you don't have liquidity. Hence, it's so hard to acquire certain stocks. And then let me also touch on liquidity. We have seen a 500% uptick in activity. And some might argue, why am I not being able to buy my stocks? And this is what investors need to acknowledge. The market, it's technically a market. And what that means is between buyers and sellers. And that means it also boils down to prices. If there's a lot of buyers and sellers in the market, potentially you can say there's high liquidity. But if there is no agreement on market price, that's when you find the difficulty. And that's why I always advise clients to watch the market. You might see activity in the market at a price higher than you intended to buy. And also remember that when you send an order, it's essentially your intention to acquire at that price. It doesn't technically mean once it goes into the market, it's going to be readily available. Hence, it's a market. It's buyer and seller. And buyer may want to acquire at a certain price, and the seller may want to sell at a certain price. In the question with MTN, I personally believe MTN has also left the hypergrowth stage. I believe investors are very, very much understand the business of it. And like I said, if we should see any catalyst for growth, it would be on earnings. I believe once earnings come in and there's more dividend visibility, you should see that. So it should be more cyclical than just having the run that it had last year. I also believe we are spoiled for performance. The stock is up 33% last I checked, and that is fairly quite an impressive move for a company with that size.
Thank you so much. Okay, so I have one more question for you, and it is, before I move on to the other speakers, and it is that as a beginner, what stocks should I be looking at? We also have a few people asking, what other investments would you recommend? ICLF, but as a beginner, what should I look into when I want to get involved in the stock market?
Sure. Thank you for that. I think we generally shy away from asking that question because investing in the stock market is not a one size fits all. And that's why we generally shy from that. We advise you to speak to your investment advisor. With that said, my personal view is to have let me backtrack on this. So the reason why I'm saying is it's not a one size fits all because everyone has different preferences. There might be a growth investor. Age also comes into play. There also is risk appetite. So someone who is risk averse might confidently invest in a stock like MTN because of performance and consistency in earnings. Someone who wants to buy Clydestone might have a larger risk appetite. And so my advice would be to speak to your investment advisor and also to understand the market. Buy stocks and companies that you understand is the most important thing. If you don't have a fair understanding of the business, I think you should ask your investment advisor how big this company is. I always say buy what you use. If you have a GCB bank account and you know the company, buy that. If you want to dig deeper into how the company is doing, do that. You use MTN, you see MTN everywhere. If they tell you it has the largest market share, it shouldn't come as a surprise. So my advice would be to buy the company or a business that you understand. It's not more so a rally. I think a lot of people get caught up in the rally and see a price movement and they don't want to miss out on the growth. I think it's fairly prudent. It's prudent to buy in the stock and have a long-term base of this is what I'm buying. Understand this company. And just to go back to how it's set up, you are a shareholder. You're basically part of the company, and so it shouldn't just be you trying to catch a return, because as much as that rally could be in your favor, if it goes the other way, you still be caught up in there. So I fairly advise that we cautiously invest in the stock market. People are investing in names they don't know because they're seeing price hikes. And like I'm saying, you might be seeing those price hikes because of liquidity, because there's no stock in the market. You might see buyers aggressively bidding. That will change market price. It doesn't always translate into material growth.
Okay, thank you. I feel like I really left that little bit of the conversation really understanding a little bit more and how I should go on. Okay, so my next question is for Herbert. Thank you so much, Alan. I'll let you know if there are any more questions that we wanna get from you. But my next question is from Herbert. Herbert, I see in my dashboard, I see the year-to-date of 1.7% and annualized return of approximately 11%. What does this mean for my investment today?
All right, so that's a good question. So the year-to-date of 1.7 is what you've earned from January to today. So if you had 100,000 at the start of the year, it means as of February today, you would have earned roughly 1,700 cedis. The annualized year-to-date of 11.45% is with the assumption that if we continue to maintain this 1.7% return, then by the end of the year or by December, then you would be earning that 11%, which essentially would mean that you'd be having roughly 11,000 cedis in your account. So the year-to-date of 1.7% is reflective of what you've actually earned today. And the annualized is the expectation that if these returns are sustainable, that's what you can expect to earn. Thank you.
Okay. And don't go just yet because I have more questions for you. And it is, if you increase the GOG bills exposure, how are you able to stay atop of the declining bill rates?
All right, so that's a good question. I think when we saw the shifts in the macros, especially with regards to declining inflation, what we did was to take active positions. And what I mean by active positions was we started to extend a bit of our portfolio duration by locking in yields across the longer end of the curve. So we started buying some of these treasury bills at much higher yields than they are trading now today. And that's also contributing to why we have higher yields on the portfolio compared to where current treasury bill rates are. So it's a combination of active treasury management on the portfolio and also leveraging on the insights that we pick up from the macros as well.
Okay. Thank you so much. Thank you so much for that. And I have a question for, actually, Alan, we're having another one being thrown at you, and it is, how liquid is the GSE?
I believe I mentioned the GSE compared to last year, year to date has increased over 500%. Now, if you look at it, you say fairly there's improvement in the liquidity on the Ghana Stock Exchange. But we also need to realize only a few tickers are liquid across the counters. Only a few of them have that favorable liquidity. So generally, we can say that the liquidity has fairly improved, but it's not across all the counters.
Thank you so much. Courage, I'm throwing something your way and this is a little bit lengthy, so let me please buckle up. But it is, by what measure are we saying that there is excessive money supply? The Forex intermediation by the Bank of Ghana was supposed to be mopped out the CD equivalent out of, sorry, was supposed to mop up the CD equivalent out of the economy in favor of Forex. Is this supply of money skewed or more to Forex or CDs, or the proportions are not the same? We need more context on the oversupply of money supply. Where is the evidence that aside the activities in the stock market, outside the stock market, that is not too evident that there is excessive money supply? So please help us. Money supply.
Right, thanks. And I will clarify very quickly. So when I said there is excess money supply, what I was referring to was the Ghana cedi, right? And we've seen significant volumes of CD supply on the market. What were the measures we looked at, or what are the measures we are looking at? Now, on the market, every week, the central bank comes to mop up the excess CD supply on the market. And in so doing, we track how much they mop up and how much they are, we're maturing versus how much they mopped up. As we speak, about 79 billion Ghana cedis is being held in Bank of Ghana, what they call OMO securities. That is excess liquidity that has consistently been mopped up from the market. Now, if you look at what is happening on the T-bill space as well, increasingly, there is the significant sizes that the Treasury, or should I say the government, is rejecting at the weekly Treasury bill auctions. That tells you the volume of money supply that investors have and are looking to place in investment instruments like Treasury bills. And for instance, last week, they rejected about 13.8 billion cedis. The previous week, they rejected in excess of 13 billion cedis. And they keep rejecting in tens of billions cedis in the past 3 to 4 weeks. These are volumes of liquidity that gives you indication of the supply of money on the market. And so when you have the central bank mopping up so much on the market, CD on the market, and there's so much also demand for Treasury bills that are being rejected than what the Treasury actually wanted to issue, and the significant amount of it being rejected, it gives you the indication of how much liquidity you have or supply of CDs you have on the markets. So those are the key indicators: how much is being mopped up by the central bank on a weekly basis, and how much we are seeing being pushed through on the T-bills auctions every week.
Thank you so much. Thank you so much. That was a very, very helpful explanation. I want to throw it to Abena, and I have a few questions here for you. Sorry, just give me 1 second while I pull that up. Okay, fantastic. Abena, why do other investing apps enable account creation without a request for a CSD account? That's my first question for you. I have plenty.
Hi, okay, please confirm if the voice is much better now.
Sorry, let me repeat the question again. Did you hear me?
Yes, okay, can you hear me?
Yes, I can hear you. Can hear you.
Is the voice much better now?
Yes.
Thank you. All right. So for IC, we believe it is good for you to own a CSD account in your name. Typically, what is the CSD account in the first place? Okay. So that is where your securities are held and kept. Okay. In the event where you want to have access to your shares, let's say if I say it's no more, you can always use your CSD account number to find your shares or own up to your own shares. So that's why we create CSD accounts. We can't speak for the other apps, but I see this is the reason why we believe it is important for you to have a CSD account in your own name so that the shares are kept in your name, and you can always have access to it anytime. Okay. So I think that will be my answer to that question.
Okay, amazing. Thank you so much. And how long will it take? And I'm going to ask this again because a few people might have missed it, but how long will it take for completed transactions to show up on the dashboard?
Okay, so that happens as a settlement date. Okay, when you complete a transaction, there's a settlement period, and that's 3 working days after the trade date. Okay, so I'm going to give an example. We execute an order for you today, which is Friday. 3 working days after today is Wednesday. All right, so that is when you should expect it to reflect on your account. We've also made that information available on the app. So once you go to your transaction history, you click on view trades, and on the next consideration, there's an arrow. Once you click on this, there's a settlement date. So it gives you that information so that you are aware of when you should expect the shares to reflect in your account.
Okay, amazing. Thank you. And I'm aware that we have a few minutes left on the clock. Once again, I want to remind you that a link is being shared in the chat. So if you have any issues specific to your account, please go ahead and put it in the chat box. But we know that there are a lot of questions about the app, about how Trade Live works, about investing, and we want to provide a space for you to ask all of the questions so we can help answer them. So next week on the 3rd of March, I believe that is a Tuesday, are actually going to hold our first TikTok live. And so any questions that you have about the markets, any questions you have about the app, we're going to have experts from the IC team join the live and answer all of those questions. So again, on the 3rd of March, 2026, we are going to go ahead and ask you some of these questions. And if you have any questions, we will be able to provide the answers to that. So I'm going to go ahead and ask one more question from the chats, and then we're going to end the live. Okay. So where do dividends paid go to? Is it my Trade Life portfolio or a bank account? Abena, could you please help answer that?
Hi, Nubuke. Hello, Nubuke.
Yes, can you hear me?
Yes, I can. All right.
Amazing. Yes.
Okay, great. So the dividends are typically paid into your bank account or mobile money account you provided at the time of registration, not to the Trade Life. So you notice when you're requesting for a CSD account, we ask you to provide any of these two. So depending on the one you provide, that is where your dividend is paid into. Thank you.
Amazing. Thank you so much, Abena, for that. And thank you so much to everybody who has joined this call today. I hope you took away some valuable key lessons. I know I did. I mean, I learned a lot. So thank you to Herbert, to Courage, and to Alan for sharing information. I feel like I'm entering 2026 smarter. And I feel like I have the strategies to be able to carry me forward. So thank you so much for everybody for joining once again. This will be available live. So you can go ahead and go to our YouTube channel where this will be available for you to go and watch over. I'm seeing a couple questions, and we answered a couple questions, and I'm seeing them come again. So definitely check out the live to be able to see if your questions were answered. And again, see you on the 3rd of March next week, Tuesday, and we'll be very excited to answer your questions. So thank you, everybody, and bye-bye. See you in our next investor call.
In a world where every second counts and the future is in your hands, IC Wealth is here to empower you. Welcome to IC Wealth, where we make managing your finances remarkably simple. Explore a diverse range of investment options with ease. With IC Wealth, investing in your tomorrow has never been simpler. Join the community of savvy investors who are making smart moves and watching their dreams grow. Ready? Download IC Wealth today and build your future. IC, Intelligent Investing.
Why you need a CSD account before you can start trading stocks. If you're ready to embark on your investment journey, this is a crucial step you can't skip. CSD stands for Central Securities Depository. It's a digital account where your stocks and fixed income securities like T-bills are held in electronic form. Think of it as a bank account, but instead of holding money, it holds your stock and T-bill investments. A CSD account ensures that your stocks are safely stored in a digital format in your own name. No more worrying about losing physical certificates or receiving physical dividend warrants through the post. Everything is electronically recorded and protected. With a CSD account, buying and selling stocks becomes much faster. You can execute trades in real time, and dividends are paid directly into your bank or mobile money account. Having your personal CSD account is a legal requirement in many countries, including ours. It ensures that all your trading activities are transparent and comply with the regulations set by the securities market authorities. Let's take a tour of the IC Wealth Home Dashboard and explore its features. Log into your IC Wealth account using your email and password, or use the biometric feature. Now you enter the verification code sent to your mobile number. This reduces the risk of unauthorized access to your account. The first thing that pops up after you sign in is the dashboard. The dashboard gives you an overview of your investments. Now, let's delve into some key features. Liquidity Fund. This feature allows you to manage your IC Liquidity Fund assets efficiently. It provides quick access to your investments in the fund and helps you transact easily. Trade Live. Tap on this tab to buy or sell equities and fixed income securities. You can view real-time market prices and put in your trade orders on the go, making it easier to manage your investment portfolio. Insights. This section offers comprehensive reports provided by the IC Insights team. These reports give you valuable market analysis and insights, helping you make informed investment decisions. Explore these features and make the most out of your IC Wealth experience.